Broadcast is now starting. All attendees are in listen-only mode.
Hi everybody, this is Lindsay Paoli with Design Manager Software, and today we're going to be doing a great webinar for you with Peter Lang, who is the Designer CPA. He's an accountant who specializes in the unique accounting challenges faced by artistic professionals. He has a bachelor's in accounting, a master's in taxation. He is a certified public accountant, and he is certified DM accountant with 16 years of experience under his belt. So today he's going to be talking about setting up the financials to share with your CPA and what financials to look at on a regular basis. He's going to be talking about the balance sheet and the profit and loss statement. And then just like our normal webinars, if you want to type questions into the question pane or the chat window, please feel free to do that. Peter will also ask some questions during the webinar to engage our listeners here, and I will announce those to him. So let's get it rolling, and I will turn it over to Peter.
Thank you, Lindsay, and thanks everyone for attending. I know that this topic can be boring, so I will try my hardest to make it as exciting as possible. But I do want to thank you for coming on and listening, because I know how annoying it can be to look at financial statements, especially when you're busy designing great projects and you've got all sorts of other stuff going on. So I will keep this as fun as possible, and like Lindsay said, if you do have a question, just go ahead and put it in the chat. So my first question to everyone, and you can just put a random answer in if you'd like, is how often do you look at the financial statements? So that's something that you can type in. But to start, I am going to, so I'm using a test account here. I figured that would be the best way to do it. And you can kind of see what I'm looking at in your own Design Manager account. So the great thing about Design Manager is the amount of robust reporting that there is. So you can break it down as simple and complex as possible based on what you're looking at. So today let's just go. I'm just going to go over. I'm going to start with some of the basic financial statements that either a bookkeeper or a CPA might be asking for and looking at. And then I want to try to explain it so that you have an idea of why maybe the bookkeeper and the CPA ask the questions that they do, get you a good basic foundation on what these things mean, so that you can go in on your spare time and look at it and hopefully come up with questions that you can kick back to your bookkeeper and your CPA and get good answers for. Okay, so the first financial statement that I'm going to talk about is the balance sheet.
Peter, we're getting some answers in here of weekly. They tend to look at them weekly, and then we have a few that are not enough.
Okay, cool. Well, weekly is awesome, and I would encourage anyone who says not enough to kind of try to set a goal to look at them weekly. So we all, as business owners, as an accountant, I struggle with this too. There's so many things that need to be done, right? So everyone talks about marketing, and I have to deal with the financials of my company, and I have to do hard things like writing blogs, and the creative side as an accountant is harder for me than it would be for a designer. So even blocking time, even blocking an hour a week and putting it in your calendar, like every Tuesday at 9 a.m. I'm going to go through. I have my list of, the best reports to look at that Peter had mentioned, and I'm going to kind of look at that and at least come up with some questions and try to kick that back and get some answers on it. But anyone who said weekly is doing great. Okay, so when you look at a balance sheet, you can see that there's an as of date. So I know this date is in the future, but for the sake of argument, let's just assume that today is June 30th, 2019. A balance sheet, when you think about a balance sheet is like a picture or a painting on a wall. You go and you look at this picture and you can see certain things as of a certain date. Okay, so obviously most of the time when you're looking at a picture or a painting, it's the same picture, it's the same, picture all the time. But just think about a balance sheet is showing me all of the different assets, liabilities, and equity on a certain day. So we're looking at this information as of June 30th, 2019. What is the business, where does the business stand on that day? It's not in perfect order, but you can see that I've got 4 different cash accounts here. I've got an operating account, I've got a savings account, I've got a client deposit account, and I've got a sales tax account. These are these are all of your business bank accounts that you may have, for example. So I just looking at things weekly, I'm wondering if you could type in how many different accounts, bank accounts you have in your business right now, and how often you're looking at those bank account balance. Because it especially in the interior design industry, it makes sense to have, I would say, at least 2, but I know of some people that have 6 or 8. That might be, a little too much to manage, but I think 2 or 3 makes sense, especially if you are marking up product and you are accepting retainers and deposits. It's good to have. So Lindsay, did you see any numbers that are popping out?
I do.
Consistent
I
numbers?
have 1, 3, 7, 1, 2, and it looks like the frequency of the reviewing them is pretty frequent. A lot of people saying daily.
Awesome. Okay, great.
Yeah.
7. You're the winner. 7. That's awesome. Um, that might be a profit first person that is breaking down their money in different accounts so that they know where that needs to go. Another question that I have is, if you are a person that is marking up product and you are you're sending out a proposal and you're asking for a certain percentage, whether it's 50 or 100% from the client, are you putting that money, if you have more than one bank account, are you putting that money first into like a client deposit account separate, or is all of that money going into an operating account? So if you're willing to share that information, that might be something that that would be interesting to see. I would suggest, if you are that type of person and you are sending out a proposal and it's a proposal for just a product that's being marked up, that money does go straight into the client deposit account, because that way you're not spending the money on other things before you need to send those to the vendors when you're placing those orders.
I have the majority so far coming in that it goes directly into one operating account.
Operating account. Okay.
Mhm.
So if you're thinking about, if you use a bank, and hopefully you do, or you can find one, if you use a bank that's not going to penalize you for having more than one account, I would suggest having more than one bank account, so that, like I said, so that as the money comes in, it can kind of stay in an account for a little while before you like set up those POs and get that money to the vendors. And then if there's a piece, if you break it down, or even if there's an invoice that, if you invoice out for your design services and a separate invoice, and that client of yours pays, yeah, that can go straight into an operating account, because you've earned that money. You've done the work and now you've earned that money. But at a minimum, I would say that I would recommend having at least 2 bank accounts. I also have a savings account here, which is always nice to have in case something comes up that you want to invest in the business, and you have that. I also have a separate account. Some people will do this for the sales tax collected from their customers. So based on the amount of sales tax that comes in, they will transfer that money out into the sales tax bank account, because they know it's not theirs, and at either next quarter or next month they have to pay it back to the jurisdiction anyway. So instead of getting that mixed up with your operating expenses and then, using that money, and then the next month, the state is saying, okay, where's the sales tax you collected? And you've already spent it. Now you're falling behind on that. It's a great way to never have to worry about losing that money. You always know it's there, and then when it's time to pay the sales tax, you just pay it when it's due. So hopefully that all makes sense, and it's something that if you are involved, especially involved in a couple of different states and you have different jurisdictions you're dealing with sales tax, it's a nice way to do it so that things aren't getting mixed up. Okay,
Yeah, there's
so
definitely a few here too, Peter, that are saying they separate the client deposits from their operating portion. Some are saying that they pull the COGS out of the deposit before it goes into other accounts. Definitely a few different ones stating all that.
Great. Okay, that sounds awesome. So if you're not doing that, that might be something that you want to look into, just so that you can have more control of your money, and you know that your money is getting allocated to the right place. So for anyone who's actually doing that already, that's awesome. Okay, so we also have an account. So just so everyone knows, your assets are the benefits of the company. I mean, these are quote unquote good things that obviously that bring value to the company. So accounts receivable, if you're not familiar with accounts receivable is basically the amount of money that clients owe in outstanding invoices. And we'll take a look at different reports that you can look at besides this, and talk more about accounts receivable. But obviously, you don't want this number to be too high, and you don't want the invoices that are in this to go on and be outstanding for too long, right? So the goal is obviously to get paid by your clients as soon as possible. And if there is a portion that you're not receiving in a proposal and then you're invoicing it out, you want to make sure that you have good systems in that you're checking in on that customer, that client of yours, and making sure that they pay the bill, obviously, right? Because your business runs on cash. So spending a long time getting cash is obviously not a good thing. Just so everyone sees this, the vendor deposits, this is an asset. This is considered, a benefit to the company because it's an asset. But if you have ever looked at the balance sheet and you see vendor deposits and you're wondering what that's all about and why it's up there, picture it as like a holding account. This is basically either when you are sending out the purchase orders to the vendors and they're requesting some sort of deposit, whether it's a 50% deposit, a 100% deposit, when you're setting up that PO and you're making that deposit through the PO, Design Manager set up so that it sits here in that holding account until you record the vendor invoice. So if the vendor sends you an invoice, and if you paid 50% and that's sitting here in that deposit, they send you the vendor invoice, it's put in and it's paid, then it'll be removed from this amount. So picture it as like a holding account until you until that invoice is paid. So you want to make sure, and we'll look at this too under reports, you want to make sure you're always reviewing the details of this account as well, even if it's on a weekly basis, to make sure that this is an accurate number. And then we have some equipment here that maybe you have some office furniture, something that lasts for more than 1 year, so it's going to sit up there. So your total assets are 91,281.41, and now we're going to talk about liabilities in the equity section. So your accounts payable amount is the same thing as accounts receivable, except it is the amount you owe to different vendors for whatever reason. So it can be a percentage of what you owe to different vendors for product. It can be your your staples bill because you ordered office supplies. It could be any sort of vendor this is a really important, so just like this accounts receivable is a really important account because you want to make sure you're getting paid by your customers as soon as possible. You also want to make sure you're keeping track and paying attention to the accounts payable, because if you aren't paying your vendor bills and you need those vendors, they're not going to keep working and providing a service or whatever product that you need to buy from them. They're not going to keep selling them if you're not paying your bills. So it's super important to keep track of that as well. And then we've got some sales tax collected that when you receive sales tax from customers and it goes into this bank account, well, this liability keeps track of the amount that you may owe to the different jurisdictions at some point. American Express, that's your credit card bill. You want to obviously make sure that you're looking at your credit card bills all the time, making sure that the charges that are on it are actually legit charges, especially in this day and age of fraud. It's important to look at those statements. And then you've got this client deposit account. So the client deposit account is just like the vendor deposit account in the sense that it is a holding account that you will see. So if you request a retainer from for a project, or if you send out a proposal and the customer has paid the proposal, but that proposal hasn't been fully invoiced to the client yet, that amount of money that you received will sit here in this holding account until the invoice goes through. Okay, so this is another report we'll look at that's really important to look at to make sure that we are looking at accurate numbers. Client deposits and accounts receivable actually are directly related, because it's possible that it could say, oh, this customer, there's invoices that they owe money. We want to directly look at these two things, and we'll look at the reports, because there could be a situation where the client already paid for it through a proposal, and we just need to close it out and connect those things between client deposits and accounts receivable. Okay. Retained earnings and common stock down here in the equity section. Common stock is just an amount of money that maybe the owners put in to start the company. Retained earnings is the amount of value that the company has earned since its beginning that is still in the company. So hopefully that's a positive number. And then owner's draw, you'll always see that as a negative number. Owner's draw is the amount that a business owner took out of the business during the year that it was not considered payroll or salary. Anything additional besides owner's salary, that's what owner's draw is. And then we've got current year income, and we'll look at the profit and loss statement next. Lindsay, any questions that might have come up on the balance sheet that I can help answer before we move on?
I don't have anything specific to the balance sheet necessarily at this time, no.
Okay, no problem. Just before we move on, I'll give it at the end as well, but let me just also give my email. My email is peter@thedesignercpa.com. So if you're listening to this after and it's not live, or maybe after that you're looking at your reports and you might have a question on that, feel free to send me an email and I'll try to answer your questions in the next couple of days as well.
Peter, I do have a question about client deposits. If through the years they have gotten out of sync basically with what is really happening in real life, so say they haven't been able to correct like a client or a vendor deposit, even though they've tried to adjust it manually each year, if that's not like matching up with what they see in real life, is there anything that you would recommend quickly to be able to do, or is that something very specific that they need to like research?
If you are looking at the open vendor deposit report and you can spot out the thing that you know might be still outstanding but the project is closed, it may just be a situation where that deposit has not been connected to the proper invoice, or maybe the vendor never sent an invoice. So I would say that trying to close those out in the current year is the best way to do it. You don't want to like go back and try to close out something in a previous year, because it may have should have been it might have should have been cleared in a previous year. So hopefully that kind of we're going to go over like the report. So hopefully between the two we can you know figure out a solution to that. If not, then maybe afterwards I can kind of look at a report and see what the person's talking about.
Okay. Try to keep
All right.
everything within the same year, fiscal year if possible. So the
Yeah.
end of the year accounting is pretty important to get that right.
Yeah.
Don't
So
want to go back to adjusting previous years, of course.
yeah. So just so everyone knows, so when a CPA finishes, if you're an S corp or a C corp and you're or a partnership, and your previous year's tax return is filed, there is a section that the CPA or the tax preparer needs to put the balance sheet on, and so like we call that like the Bible, right? So the IRS has a copy of that, and we want to make sure that like it's not a good example because I just kind of put numbers in here. But if you're seeing these prior year numbers and you're looking at December 31st of a year end, if you're a year end, you want to make sure that these numbers in the prior year column always agree with what was on the tax return. That's the cleanest way to do it. So if anything should have gotten adjusted in previous years on here that didn't, we always recommend like just doing it as soon as possible in the current year. All right, so if we move on here to the profit and loss or the income statements, let's just see. So what's cool about this is we can look at the monthly income statement. You can look at it and break it down by quarterly, yearly, comparative for custom periods. So no excuse why you shouldn't be looking at this stuff, because Design Manager does an awesome job of giving you the ability to break it down in a custom time period. It's pretty awesome. Okay. So this is an income statement, and an income statement shows you how things have been going in your business over a certain amount of time period. So for this one, we're looking at for the entire year of 2019 for the sake of argument. This tells us some of the story, right? So just so you know, like when the IRS is looking at a tax return or when your accountant is asking for reports, what you pay taxes on is based on the income statement, okay? So the thing that you will not see on an income statement is anything to do with the cash account, okay? So you may have had a situation in either in the current year or previous years where you had paid back, you had some cash in the bank account and you paid back some old credit card bills, or you paid back some debt that you had previously taken out to invest in the business, or maybe you took out some extra money out of the business for personal reasons. And now there's no money left. It's been spent, and it's just not there anymore. That taking that money or that cash out for those reasons is not going to affect this net income number, and thus would not affect how much taxes you have to pay. So there might have been a situation where someone who prepares your tax return does it, and you got surprised finding out that you owed a certain amount of money, and you're thinking to yourself, well, how can that be? Because I spent all the money on different things. I paid back all this stuff, and now I've got this surprise tax bill. What gives? Well, it's because it's based on this number. The account is looking at this number, and they're calculating the tax due based on that. So if you have, hopefully everyone's using an accountant that checks in with them at least a couple of times a year, if not on a quarterly basis, so that they know what's going on in the business, and then they can help you with tax projections. When we as accountants are figuring out tax projections, we're going to the income statement and we're looking at what kind of profit or net income looks like at the end of the year. So this will show you, and this will give you, it's still a very valuable financial statement to show you how your business is doing. The thing I like about Design Manager is that you can see that it will break down different things, and it's all about how you're setting up your invoices. But you can see that out of the total sales for the year, $260 came to accessories, $1,672.50 comes to your comes from your professional service or your time. So also you can see this as each line item, you can see this percentage as a total of your income. So if you were ever wondering, okay, I know how much I made in gross sales last year or quarter or month, I wonder how much of that is made up of time bills. How much did I make from from time? So in this particular situation, it was like almost 7%. So as you can see, this test design firm is making most of their money on furniture sales. So you can see that everything is broken down. This number, your gross sales, is the amount of money that has come into the business from customers, and how much you've earned before you had to spend any money. Okay, and then cost of goods sold. You will see this is like all of the expenses that you had to pay for your vendor items, maybe your delivery and freight, anything directly related to the sale of product is going to go under the cost of goods sold section. You may have other things that go up there, like different labor charges on subcontractors, or if there's something that maybe 100% is directly related to the cost of the product sold, then it might make sense for you to put that up there. Okay, so then there's a key line item here, gross profit. And gross profit is the income after all of the expenses from the product or directly related to the cost of selling the product, what you have left over. Okay, so in this particular example, their gross profit percentage was 56%. Okay, so this is a really important line item to look at if you're marking up product and selling product. You want to always make sure you're looking at this and making sure that gross profit percentage is as high as possible, right? So if you are looking at it and you're comparing it with different quarters or different months, based on whatever you want, because you're able to do that in Design Manager, and you can see, wow, in the last couple of years, my gross profit percentage has really gone down. I wonder why. It may just be that the cost of this furniture, this cost of these products have gone up. You're paying the vendor more, but are you properly marking up the cost to your client? So that's a good gross profit percentage is a good percentage to take a look at, and also compare since the inception of your business, to see how the life of the business, how that has affected the gross profit. And then we have our operating expenses, and those can be, there's a couple of examples here, but those are basically your fixed and variable expenses to keep the business running. So if you have administrative staff, it would go down here, any like insurance, utilities, supplies, your telephone bills, you might see, cell phone bills, anything like that that is not directly related to the project, you're going to find goes into the operating expenses. And then finally, your net income is what you've made, basically. So it takes your gross sales, subtracts all of the money out, whether it's product or operating expenses, and that's what we're left with, and that's what the IRS is going to expect you to pay taxes on. Any questions, Lindsay?
We do, Peter. We have a few. Would a tax return done on a cash basis include client deposits as income?
If done right, yes.
Okay. I post all invoices and payments through the deposit balance account. Is there any problem with that?
No, as long as you're reviewing the reports that we'll take a look at it. As long as you're reviewing it and it's, eventually making its way out of those deposit accounts. They shouldn't be in there forever.
Okay. Great answer. Is it true that the job cost and income does not make it to the income statement until an invoice to a client is made?
Correct.
Yes, I can confirm that as well. um, let's see here. There's a few different ones. How do you reflect an expense that was paid in a current year, 2019, but was for the prior year, 2018? The example is SEP payment or SEP
Okay.
payment.
Yep.
Affects both balance sheet and income statement.
Right. So Design Manager is operated on the accrual basis. So if a payable was put into, if it was reflecting, let's say, the 2018 tax return and a bill was put in, or a journal entry was put in reflecting that expense in 2018, when that actually was paid, that will lower the balance sheet payable. Not to get too complicated, but that will lower the payable on the balance sheet, and the expense will still be in the previous year. If that bill was not done, and then whoever is putting it in is just kind of putting it in on an expense in 2019, it's going to show up on the income statement in 2019.
Okay.
I hope I explained that right. It kind of depends on how it's set up.
Mm-hmm. I think that's good for now.
Okay. All right. So let's see. Okay. So if we go back here, I clicked on financial statements. I still have this open. So we're still under reports. Let's look at accounts receivable first. So you've got aged accounts receivable. Whoops. Okay, hopefully this has some stuff in it. So when you look at your aged accounts receivable detail, you're going to see all the clients, all the projects, the clients and the projects listed here. And then these are client invoices that have already been set up, and the date of those invoices. And then if it has not completely been paid off and closed, then you will see an amount due here. So you see the total amount due, and then you can see these different columns with the different days, okay? You want them, anything outstanding needs, ideally it's over here. Anything over here, they say after over 90 days, the chances of actually collecting them drastically decrease. So this is why we recommend looking at this report on a weekly basis. This is, there's just a couple of examples on here. If I'm the owner and I'm looking at this, hopefully I have an idea of why this project, the Hilson Pocono home, hopefully I have an idea of why they haven't paid this bill yet. And if it's that we haven't sent the client an invoice, then that's not good. We need to, come up with either a person or a time for you, if you're a solo person, to make sure that these invoices are, you set up the invoice, make sure they're going to the clients. And I know that with the software. It makes it super easy. You set it up, you set it to the client. So if it's a situation where you haven't heard from them, or maybe they haven't responded on when they're going to pay, looking at this report weekly gives you a good reminder, hey, I need to check in with the client and see how that's coming along. Maybe they said they were going to send a check and you haven't received it yet. Where is it, type of thing. Okay, so this is a very important report to look at on a weekly basis, because cash is king. You run your business on cash, and this report just kind of states, hey, this is the amount of money that you could have received by now. How come, you haven't got it yet? Any questions on that, Lindsay?
Yeah, actually, one just came in, Peter. If over 90 days and you need to write it off, what is the best way to do that? A journal entry to debit bad debt and credit accounts receivable?
Let's see. That's a good question. I would suggest maybe if there is an option to do a credit or to void the invoice, but make sure that you're using the current date of doing it. So whether you're doing it through a journal entry or you're just voiding or crediting the invoice, don't make the journal entry or don't make the credit the original date of the invoice. Make it in the current year, preferably on the day that you're choosing to write it off, because you're never going to get paid.
Mm-hmm.
So that's the real important part.
Okay. Yeah, that's all we have for right now.
Okay. I'm going to keep this one open. And the other report that I want to show you that has to, directly directly related to this is the open client deposit one. So the client deposit account was, if you remember, was on the balance sheet under the liability section. That's a holding account that will sit there. The amounts will sit there until these either retainer or proposal amounts are directly matched with a client invoice. Okay, so these are just two examples. You can see you've got a couple of proposals here that were set up for this project, and either they haven't been invoiced yet, or maybe the invoice was set up, but it wasn't directly related. It wasn't directly connected. Let's see if I can do this without getting. I'm going to get out of this one. Okay, so. Okay, good. So I hope everyone can see this okay still with these two things, but this can happen. I know this can happen a lot if you're not constantly looking at these reports and kind of comparing them together. So see how this client, so we've got a project and an order, CAR01, the invoice, and we owe $1,065 on that. It's possible that an invoice can be on the accounts receivable report, and it says it's outstanding, but maybe the retainer or proposal amount is here, and it should be applied to this invoice. It's just important to review these two reports. I would suggest reviewing these two reports at the same time and making sure that everything that says is outstanding isn't really just hasn't really just been not connected to a payment that has already been received, if that makes any sense. And another place you can look in order to do that would be under the cash receipts section as well. You just want to make sure that you don't have a situation where this report says that there's an invoice balance due, and you're calling that client and saying, hey, where's the money? But they're going to say, well, you said you were going to apply the retainer, and now the retainer amount is still stuck in this holding account because it hasn't been connected to those invoices. I hope that makes sense, but I've seen that before with clients where we're reviewing these reports and the accounts receivable balance, because maybe, you know, they had they were finishing 2 or 3 projects at the same time, and that was really important to get done, and we just didn't get a chance to look at it or go over it on a weekly basis. And then by the time we all sat down and we talked about it with the principal, we were saying, oh my gosh, look how much accounts receivable is. We really need to get on the phone and get this money from clients. And then when we reviewed the client open deposit, it was just a matter of, wait, someone needs to go in and just make sure that these payments that were received in the holding account are actually connected with the appropriate client invoice. Does that all make sense, Lindsay, or am I hope I'm not losing people with trying to go back and forth with 2 reports here.
Is there any way to show how, like, connecting one, like you're talking about? I do have a couple of people that are asking about how to do that. I know. I don't know if you have any good ones out there.
Let's see if I can see. Okay, so I always will, if you go under cash receipts, let me see. This is a test thing, so I don't know how much information is going to be in here, but we can take a look. So let's just say this Carter project here, we saw something in aged accounts receivable, we saw something in open client deposit. So if you go in and you select the project where you can see 2 different things, we can see, okay, so we can see that there was a retainer that we have available. That's still going to be part of the open client deposit report, because it hasn't been applied to an invoice yet. And then we see a couple of balance dues still on the invoice. So let's just say, for the sake of argument, because this can be kind of tricky, so I'm glad that this is here. Let's just say that you realize that Carter is going to use their retainer on paying off a portion of this invoice here, invoice 10001. So this is the way I want you to think about it. Or if you have someone in your office who puts this stuff in, or if you have a bookkeeper who maybe is like, this is so confusing, how, I don't understand how we're supposed to do this. This is going to be, Lindsay, this is going to be on YouTube later, right?
Yes, absolutely.
Okay, cool. All right. So you're not really, think about it like this, okay? You're not really receiving any money today from the client, okay? You're just trying to fix the outstanding issue. So under amount, you want to put 0.00, because if you think about it, I'm not receiving any money. It's today, you're going to deal with this, and now, so you want to make sure that you click on this pay tag box, and then you've got to click on this pencil, okay? And we're moving the amount. So you have to put a negative number, okay? So this payment is gonna be negative, and then we're going to apply it to this. Oh, I hope this works, right? But we're only moving, it'll automatically think you're getting the entire amount. You want to make sure that it's that, okay? So now down in this section, you're looking at it, and this difference always has to be 0.00, okay? So when you are looking at this and you want to adjust it, you're always gonna click on the pencil, and you wanna make sure that the difference is 0. If the difference isn't 0, it's not gonna even go through. All right, let's just see what happens. Okay, a payment type. You can pick anything, because quite frankly, nothing actually happened. So just to get everyone, to get the computer to be happy, we just say whatever. Let's just see what happens. This may or may not work, because I'll be honest with you, I just kind of put in some beginning numbers in to test, but at least you'll see, okay, so you can see that that number went down. It was 14,917, and now we've applied the retainer, and so now applying the retainer to the invoice, you'll see that this holding account, it's no longer there, so it goes down. Okay, and then if we look at the aged accounts receivable, you can see that. Okay, that says negative because I kind of just put it to the project, but again, we kind of just made a test account so you guys could kind of see it with a little bit of information, but we didn't really get into details with you know, project items and stuff like that. So even though that looks a little strange, you can kind of see that if that invoice actually was there, it would have been lower. Okay, I feel like a lot of people get confused with this, so just make sure that you're using a $0 amount and you're using the pencil to kind of apply it. And that is the same, I believe that's the same way of doing it on the other side too. And we can look at those reports as well. Lindsay, is there anything that's come up that I can try to answer?
No, but that was good, Peter. And we do have other webinars that are out there and other videos too that we have on client deposits and things like
Yeah,
that. So I'm sure that we can
I know.
find a good snippet for you too. So we can
Okay.
probably
I didn't
send
want to
that
get
around
too
too. I
complicated,
know. I know. We
but
can
I
set it
do
up for
want, I
that.
know it's something that comes up a lot where people say,
Yeah.
I don't, you know, how do I do this? Um, the bot the biggest thing I can tell you is that if you are comparing that aged accounts receivable report with the client open deposit report, and make sure that those items in the client open deposit reports are being looked at and applied to the proper invoices, your numbers are going to look even more accurate than, you know, than that. Okay, let's see. Let's look. Okay, so that's pretty much everything, all the reports I wanted to kind of talk about when it comes to receiving money. So if we switch over to if you look under accounts payable, now if you remember, accounts payable was a liability, and those are all things that you owe to vendors yourself as a business, okay? So if you look under your aged accounts payable, it looks very similar to the accounts receivable report, except we're looking at the vendors. These are all the vendors that we as a business owe money to. If there's a PO that was set up that's related, it'll be here. An invoice number will be set up here, so that way you can see, okay, yes, I remember having to order this from this vendor for this project. This is very important, the due date, right? We don't want to, we want to make sure we're looking at that every week and make sure we're paying our bills on time. And then this will show you, just like accounts receivable, how long it took for a client to pay you. This will show you how old these invoices are. So obviously you don't want too much that gets carried into this column, and now, you know, you need, let's say it's a moving company or a freight company, and you forgot to pay the bill, and you call and you say, well, you know, my client needs all of this stuff delivered to their house in a week, and they're going to say, well, that's nice, but you didn't pay your bill, so, you know, we're not putting you on the schedule, that kind of stuff. That's a great example of just making sure that you're keeping your vendors happy, and they're, you know, then in turn doing the work that you need to get done so the project gets done, right? And then the only other one, so this open vendor deposit account, oh good, there are stuff in here. Okay, this is just like what we looked at when we look at the open client deposit report. We want to make sure that we're looking at these two reports, the accounts payable report and the open vendor deposit report at the same time, just like we looked at the open client deposit report and the accounts receivable at the same time. That way, because sometimes I've seen this before where the vendor is asking us for 100% deposit with the purchase order, and so we're paying that, and we know that it's been fully paid. We're trying to finish up a project, and we remember, everything's been paid for and it's been delivered, and now the project is wrapping up or it's done. We want to make sure we're reviewing this, and even if we never received an actual vendor invoice yet, we want to make sure that a vendor invoice is set up for each vendor, and the proper purchase order is being connected to that vendor invoice, so that this holding account, these items in this holding account, can clear out. And then if it is a situation where maybe you received like half of a deposit and that's still there, you might still see something on the aged accounts payable. If it's 100% deposit and you've closed out these POs with accounts payable, then neither that vendor invoice amount will not be on either one of those reports, either open vendor or accounts payable. Does that make sense? Any questions, Lindsay?
I don't have any right now, Peter.
Okay.
I think we're moving along pretty good.
Okay. I do have one other report that I think is important for everyone to look at. And let's see. Where did it go? Okay. Okay. So this sales tax report is under accounts receivable. And I don't know if anything's going to be in there, but we can look anyway. Okay. Yep, there it is. Okay, great. So under the accounts receivable section, you'll see a sales tax report. And so if you have more than one jurisdiction that you have projects in, and you have set it up in Design Manager so that Design Manager knows, which state the project's in and the proper sales tax. And as you're putting those items in, and you're saying whether or not those items are taxable based on the jurisdiction, that information is going to get accumulated on this report based on invoice number. And these reports, so what will happen is, let's say you had more than one state. New Jersey, all the New Jersey invoices would be listed on the pages, and then you would find the other tax jurisdiction. So whether you file your sales tax reports or you have a bookkeeper filing them, this is a Design Manager makes it super easy to file your sales tax report by looking at this stuff. And if everything has been coded properly when you're putting the items in, filing sales tax is a breeze. You've got your non-taxable sales, anything that's non-taxable in this column based on the invoice, your taxable sales, and then the amount. This is the amount of sales tax that you've collected from the customer that needs to be paid to the jurisdiction, whether it's in the following month if you have to file monthly, or the following quarter if you have to file quarter. And this was the total amount that you received from the customer. So this is a great report to review and make sure that you're keeping track of, sometimes people will look at this once a month. I would look at it once a month and see, okay, I've collected this much in sales tax. If I'm using one bank account, do I have enough? Am I going to have enough money to pay my operating bills and the sales tax? Or, oops, did I spend too much money that I really shouldn't have spent because it's not my money, and now I have to struggle to figure out how I'm going to pay it? Which is, if we go back to the beginning, if you do have a separate account that kind of breaks apart the sales tax that's collected, super easy. You look at this, make sure that the amount in the sales tax bank account agrees with what you have to pay, and then the money goes straight out of that account. So I think that those are the key reports, not to get too complicated, but those are the key reports that you can kind of make sure you are blocking some time every week to kind of take a look at and see if they make sense. And then, I know if you're not used to looking at it and looking at the finances can be kind of complicated. At least getting used to looking at it and seeing like the projects and what they're related to, and then that way you can hopefully build good questions to either go back to a bookkeeper or a CPA and get some good answers for.
Great. Thank you so much, Peter. We do have a few more questions if you don't mind
Yeah, sure.
helping out a bit here. What if there's a negative balance on the open vendor report, open vendor deposit report? How can I clear that up?
A negative on the open vendor deposit report. Um, that might be, that might be if the, that's a good question.
Yeah,
Lindsay, do you guys see that sometimes? I know
I
there's
wonder
quirky
if
things that
it's
can happen sometimes.
yeah, I wonder if it's like some sort of like a return or like you know what I mean? Something came
Yep.
back and opened it back up. Um, I think you'd have to look at the whole, item and kind of see like what happened throughout the
Yeah.
history to see if there was like a return or something to be able to see if we could possibly invoice that through to get it off of there.
Right.
Yeah.
Usually it means like something might have happened and not all of the pieces to the project kind of connected to one another, and that's why it looks the way it does.
We can, if you want to, send us that at support at designmanager.com. If you want to send us a copy of that report, we could definitely take a look at that too, to see if we can
Yes.
dig into that further.
Before we go on to another question, I have to say that support is great. There's been plenty of times that I have seen funky things on reports that I try to look at, and then I get to the point where I have to throw my hands up in the air and say, something's going on. I can't solve it. Please help me. And then, within a day, I get like an answer about a transaction that maybe just didn't get updated, or there was something that happened and it resolved itself. So.
Cool. Yeah, that's great. So we had just a few other questions here. All right, let's start with this one. So what key reports do you recommend for a CPA, like on a quarterly basis?
To review with your CPA, or what
Yes.
your CPA should be asking to see.
Um, oh
Because
yeah,
at
yeah,
a
yeah.
minimum,
CPA asked to see.
the CPA should be asking to see a balance sheet and yearly income statement. And a good CPA would be asking for a comparative income statement. That's at a minimum. Especially if that's someone who is just, if it's a tax preparer CPA. Now, if we're talking about a bookkeeper, it kind of depends on their role. If their role as a bookkeeper is just to kind of go in and reconcile your credit cards and your um, checking account, then they might only be asking for bank statements and credit card statements, and they're doing that. If it's somebody who is doing everything and they're kind of also invoicing customers for you and invoicing, dealing with the vendor invoices and the POs and the proposals and that kind of stuff, and they're doing the accounting and they're doing more of like the office management, then I would say that those people should be at least sitting down with the project manager and reviewing the open client deposits with the accounts receivable and the open vendor deposits with the accounts payable.
Okay. And from like a specific like tax purposes, is there something that the CPA should be asking for besides the balance sheet and the income statement, like strictly for taxes?
Um, okay, so when they're looking at the income statement, there might be things, especially if they're comparing it with last year, there might be things that get allocated to a certain account. For example, if I'm looking at an income statement and I don't have access to my client's design manager, so I can't go in, let's say I see something strange like uh, on the income statement, there's an account that's just called taxes. And last year it was $400, and now it's like 14,584. I'm gonna ask for that account detail report. So you can look at right here on account inquiry. Um, there's you can pick an account and do a date range, and it'll show you every single transaction that has hit that account during that custom time. So I'm definitely asking for an account inquiry report in taxes because I want to know, is sales tax, income tax, and payroll tax all being combined and put into one account called taxes because the person who's doing it doesn't know the difference, so they're just throwing it to a taxes account. So at a minimum, I would say, you want to look at the balance sheet and the income statement. And then usually what happens is when we see that income statement, it'll a couple of red flags will come up that we're just asking for more information so that, because there's certain things that aren't deductible or are half deductible or whatever. So, if I want to do an accurate tax projection for my client, I want to see the details of different accounts to make sure that if there's something stuck in there, that's non-deductible, I'm giving them the best projection.
Okay, got it. And so design manager reports are done on an accrual basis, so we might not have the cash yet, but we have to pay the tax. Is that correct? Based on the
If you
sales
are,
tax report that you
uh-huh.
do.
Okay, so if you're paying sales tax on a cash basis, because you haven't received, so what I have done in the past is, if you are doing it in the cash basis and this invoice is still outstanding and you haven't gotten paid for it yet, I would be keeping track of that, but not paying it until the client actually pays me the money.
Yeah,
Because,
so yes, design manager is pretty specific in the fact that you really shouldn't be paying the tax until you're collecting on it in the invoicing and stuff like that. Like the deposit is specifically not supposed to be taxable unless you talk to your CPA and that's the way that you want to run it. That's usually our position from the software's point of view. But again,
yep,
obviously, Peter, every jurisdiction is different, every county is different, and CPAs like to see things differently. So, some people do like to start paying it right away. But the way that the system is set up is really like, when you invoice, that's when you pay the full amount of the tax.
yep, yep,
Okay.
not before that. Not, if you just sent out a proposal and you're getting um, some money down or even the whole amount, you know, you don't want to pay that sales tax until it's been invoiced and completely paid in full.
Right, exactly. And then I have a really interesting question. I think it's the last one here. And I think it kind of has to do with the new Nexus rules, Peter. Are you,
Oh,
I know, are you, I mean, it's pretty simple and straightforward. Like, it was a person in one state having sold products in another state, and they had contacted that state and they had said since they didn't physically deliver the product and it went through a receiving company that they didn't owe that state the sales tax on the product and that it was up to the client to pay the use tax on it. Have you seen, those things start to change because of the rules or, you
yeah,
know,
the rules are changed. I mean, like California just changed their rules like a month ago.
right?
Um, so I would suggest there's two things. I mean, you can call the state and ask, and hopefully, I mean, it depends on the state. So I have clients that live in states where they call and they get a great answer. And then
Right,
I live in a state where you can call and you would talk to three different people and get three different answers, and all
right.
three could be wrong.
No.
Um, so I would say just, make sure that you are calling at least, and then let me give you, there is a website. I don't use it, but I know of other people who use it.
Okay.
And I do know that this website has a lot of, they do a very good job of like having blog posts and articles on updated things. And they'll even say like, this state is thinking about changing their rules, and they'll let you know whether or not it happens. It's called Avalara.
Okay.
So it's Avalara.
Okay. We
And they
have
have a
heard of
lot of
this.
free, Yeah, they have a lot of free information on there that talks about the different jurisdictions. They're changing all the time. So, unfortunately, it's one of those things that we need to obviously keep track of all the things that are changing all the time, and it's definitely one of the most complex topics, especially in the interior design
It is
industry.
because having talked to all the clients that we talked to, the thousands of interior designers that use the program, we've heard so many different, we've heard thousands of different answers to these questions. And that used to be the deciding factor, whether you had a physical presence in that state or not, and that made the decision and boom, done. But with the
Right.
Wayfair decision and the new Nexus rules going across, last year, every single state has decided to adopt it differently. And somebody else just commented too about $100,000 in annual sales or 200 individual transactions. So there's
Yep.
all kinds of things. I mean, specifically, isn't Massachusetts though? Isn't that like $500,000 in annual sales? Like, so every single
Every
state.
state has
Hmm.
their own threshold. So yes, it's usually based on a certain dollar amount and a certain number of transactions.
Right,
Every state can come up with what they want that to be, whether it's
right.
0, 100, 200, 500,000. And unfortunately, some of the states are also changing as
Yes,
they go along those
yes.
numbers.
Yes, and all the implementation dates were different as well.
Yeah, of course.
So some of them enacted last year, some are starting this year, so it's very crazy and you're not alone, that's for sure. Everybody is trying to figure this out right now. So the best thing to do is just keep in contact with your CPA, keep in contact with your state, and then obviously any of the states that you are doing business with, check out their individual websites. And then, like Peter said, try these outside accounting resources like Avalara, where they do blog posts and things on that subject matter as well.
And also, some states will come out with different like letters and other programs specifically for an industry. So I know New York has one. I've seen one from Minnesota. I'm sure there's a lot of them, but it'll specifically be um, catered towards interior designers, and it'll talk about like the state will talk about specific things that as an interior designer you deal with every single day, and whether or not that is. Now granted, I've read some of them and I'm still like, okay, you didn't even explain that clearly. I could read one sentence and
Mm-hmm.
think one way, and um but at least on like um overall like broad things, you can they're trying to answer them.
Yes.
So
I have another question that just came in too. What about design hours? Are those taxable or does that depend on the state?
Depends on the state.
Yeah.
Most states don't do that, but I'm not gonna. Um, yeah.
It's very
Check with.
dependent. Hmm.
It also, there's also states that if you are doing, it depends on what you're doing with your time,
Hmm. We've seen
which
that
is,
too.
yeah, so that's even more complicated. Yeah, it's very important to do your homework on this
Hmm.
subject.
And if you really, you can talk to other interior designers too in your area. If you're part of any organizations and you do any networking, sometimes that's good as well because if you're not feeling 100% confident in your CPA, you could always A, come to us to find a CPA, or B, talk to some designers in your area and see if they actually have a decent CPA for you to work with as well.
Yeah, you want to make sure you're working with people on your financial team that you feel comfortable with asking a question and know that you're getting a solid answer.
Hmm. All right, I think that's it for the questions that I can see here. Peter, did you have anything else to add?
No, if anything comes up, like I said in the middle of the presentation, if anything comes up and you have a question on a report, maybe that we talked about, after you're looking at your own reports, you can find me either on Instagram at the Designer CPA. You can email me at peter@thedesignercpa.com. and you can check out our website.
All right. Thank you so much, Peter. Thank you for giving us your time today. It was wonderful. And we will actually be doing a few more guest webinars with Peter to complete our series for the year. So stay tuned. Those will be in September and then again in December. So we will send out an email blast before both of those, and you can sign up then. So everybody have a great day, and thank you so much for joining.